Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Thank you, Samantha Bailey. Good afternoon. Welcome to 7 Investing Now. My name, as you all know by now, is Daniel Brooks Klein, but my friends call me Dan. I'm joined today by Matt Cochran and Austin Lieberman. Matt, you're about, 30 minutes south of me. What's the weather like in the Fort Lauderdale area?
It's about low 80 degrees and very humid out.
And Austin, you're maybe 3.5 hours north? This is an all Florida edition of 7 Investing Now. I think that's first. Austin, is a little cooler up there?
I think it's in the 70s. I think we should always do it this way, though. We don't need anyone from any other state on this show. Let's just do Florida shows.
We're like a month away from Steve being snowed in for like 3 months. He had a foot of snow last we talked. But guys, this show, we're going to focus on some of the big news coming out around IPOs. Remember, we take a long-term approach on investing. That doesn't mean we don't look at what's happening now. And there are some really exciting IPOs coming up. So that's going to be our top story. After that, we're going to talk a little bit about Disney and a little bit about Fastly. And then, of course, we're going to hit our finisher. But guys, there are 4 big IPOs coming up. One of them actually filed today. That'd be DoorDash. The other 3 are Airbnb, Wish, and, of course, Roblox, which Matt is very experienced with. But, Austin, I'm going to throw it to you. We've all had our experiences with Airbnb. I'm going to say mine are pretty mixed. I've stayed some places that were better than expected. I stayed one place that everything was great, except the shower was like a coffin. I had to stand in it exactly like it. It was not great. But, guys, just pointed out, Rayal has pointed out, we should not be doing this on Friday the 13th. We don't get to choose what days we do this. We do it Monday, Wednesday, Friday at noon. Austin, why don't you give us the top line on Airbnb, and then I'll go to everybody for their personal thoughts.
Yeah, so fun fact, I've never stayed in an Airbnb, which is kind of crazy. Coming into 2020, Airbnb was prepared for a blockbuster IPO. It was probably one of the most expected, and people were most excited about their IPO. But the pandemic put a halt to travel, and Airbnb was forced to cut 1,900 jobs, which is about 25% of its workforce. They also had to raise $2 billion in high interest debt and then slash their valuation. So I think they raised money at a lower valuation than some of their previous rounds to $26 billion, which is still a pretty hefty valuation. So that was in April and May. And then in recent months, Airbnb has actually been able to reignite growth as travelers hit the road to seek out vacations homes, and start to get some travel back. And I personally, Dan, I thought this was going to absolutely crush Airbnb because I didn't think travelers, and I myself wasn't ready to trust random people on Airbnb to clean their places properly after other people came through with, the pandemic. So yeah,
it's a tough call, and Airbnb put some standards in place. And I know I'm looking for either experienced hosts, and because I have stayed in an Airbnb, I stayed in Key West but it was managed by a vacation company. It wasn't like staying in somebody's like guest house or their in-law apartment. So I'm a little wary of Airbnb. I think the biggest problem with Airbnb as a business is they're competing with hotels. They don't have a ton of price flexibility. And I understand the benefit of some people want a kitchen. Some people will crash on somebody else's couch, which that's appalling to me. But I've found that realistically, the quality of the listings does not always equal. It's kind of like your dating profile picture. You put up the best possible picture of you, where sometimes that's not exactly what you look like. Matt, have you stayed in an Airbnb?
I have not either. We do VRBO at times, but never at an Airbnb.
Very much the same process. And Kunal says, can you really trust hotels to do the same? Yeah, hotels have I've stayed in a bunch of hotels, and hotels are putting, sealed things on the door. They're not coming in unless you request while you're staying there. They're using more throwaway items as opposed to they'd been moving to the dispensers in the shower that give you soap and shampoo. I do think Airbnb is going to be fine. I think it's just an area where I'm not overly looking to invest. Feel free to throw your questions and your comments in. For me, I get it. It's disruptive. They don't carry a lot of cost, but I do think there is a lot of demand risk involved. Guys, we're going to move on to the next one, and that's Wish. Wish is an online retailer. It's kind of like an online dollar store. Like, not everything's $1, but they sell a lot of junk. Matt, your thoughts here?
Yeah, well, I mean, if you think that sounds like a crowded marketplace, like an online retailer that sells bargains, you'd be right. And that's not to say there's not a lot of room for companies like this, but that also doesn't mean you necessarily have to invest in all of them either. Last year, Wish was valued at $11.2 billion, and that's gained momentum. I mean, the pandemic, unlike Airbnb, the pandemic has helped them. It's driven more shoppers online. And it has 70 million active users that look at its discounted goods in categories like home goods, apparel, and electronics. Personally, like, my wife has made an account on Wish, but when I asked her about it, she said she has never made a purchase on Wish. Now, go ahead, Dan.
Yeah, so I have. And so you might go to a dollar store, like, I don't know, you're somewhere, you need a hammer, but when you're done with it, you're just going to throw it away or abandon it. Maybe you're on vacation and you need something. Dollar stores can be good for that. I've purchased some things for Wish on that idea that they're sort of going to be disposable, and I found the quality to be awful. And Kanal says, have you all ever seen a Wish ad? Awful. Yeah. For some reason, all of the Wish ads I get in like my Facebook feed are like fairly explicit. Like, I don't even know how else to put it. Like, they're selling things that I would never buy and certainly don't want in my Facebook feed. That's one that I get it. It's a good business. People like value, but I think there's a point where you get what you pay for, and Wish is one I would not touch. But the next one we have coming
Dan,
up.
hold on. So
yeah,
Dan,
go ahead,
you're
Matt.
telling me you're expecting disposable quality, but it didn't even live up to that already low standard?
Yes. Like it's one of those, like, we've talked about this. I bought a whole bunch of ponchos to leave in our Orlando house because it rains pretty much every day in Florida, and it's one of those cases where if you get a poncho and you're going to throw it away, but if you put it over your head and it rips, well, that you didn't save any money by buying it for $0.25 instead of $1. So I do think there's sort of Wish is below what I would consider the quality, and you don't really know what you're getting. Now, are they a well-run business? Yeah, they're not promising 2-day delivery. You can bundle a bunch in an order and hit a minimum to get, I forget if it's free or low cost, but parts of their business are good. I have not seen their merchandise be particularly good. And again, I went in with very, very low standards. Now, we don't have financials. DoorDash, the next one we're going to talk about, is the only company that's actually filed here. The other three, we're just sort of guessing where they are. But Austin, DoorDash is food delivery. I use them all the time. I would say they do a pretty good job. It's very similar to Uber Eats or Grubhub. They're two leading competitors where you can track your delivery along the way. They also do some of the same underhanded things where they put restaurants on the platform that haven't partnered with them. They charge pretty heavily to the restaurants. It's not inexpensive for consumers to use it. But that said, Austin Lieberman, your thoughts here?
Yeah, so spoiler alert, I don't know that I'm going to invest in any of these companies ever. If I invest in any, it might be Roblox, and that just depends on valuation and stuff. But out of the four, this is probably, I think, that my second favorite business next to Roblox or Matt, however you say it. But this stat is actually pretty interesting to me. So according to data from the analytics firm Second Measure, the company actually earned 49% of U.S. meal delivery sales in September, which is more than double Uber Eats, which captured 22%. And then this is what has me a little bit interested in this business. Again, I probably will not invest in it, especially with all the excitement around IPO. But they reported $1.9 billion in revenue for the 9 months that ended September 30th, and a net loss of $149 million. That's really impressive compared to some other businesses that are at this scale and coming public. And then even more impressive is that's up from $587 million in revenue during the same period in 2019, with a net loss of $533 million. So net loss is down to only $149 million from $533 million. They're growing fast. That's actually pretty impressive scale right there.
So, Austin, they're growing, but don't you think we're kind of at peak food delivery right now? Like, in a post-pandemic world, like I get food delivered 2 to 3 times a week. In a post-pandemic world, it would probably be once. I feel like that's probably true for a lot of people. Your thoughts?
Yep, totally agree with you, Dan. And this is what has me like very cautious on these companies. We had been getting some groceries delivered, and then just last week, my wife and I talked about it. And we were like, why pay $14 just to have our groceries delivered when we can go? A lot of grocery stores now are doing like quick pickup, and restaurants are doing curbside pickup and stuff. I think that is more likely to stay and stay at the levels it is. Curbside pickup, while food delivery trends back down.
Yeah, and it's one of those things where any talk about profitability for DoorDash always involves, and this is the same thing with Uber Eats, is, well, we're also going to pick up your dry cleaning. We're also going to pick up your groceries. And that, to me, I don't really trust them to do a great job delivering me food. It's hit or miss whether you actually get what you ordered, their ability to sort of rectify that. It's like they'll give you a refund. But if you ordered, Matt, if you ordered meals for you, your wife, and each of your 4 kids, and 2 of the kids' meals don't come, that's not going to be a happy dinner. That is going to be an uncomfortable evening that involves you getting in the car and going out to pick up food. That's not going to go well. I don't like this business. I don't think it's investable. It's probably the best of a bad category. One of our users saying food delivery is a race to the bottom. Zach F says, how scalable is DoorDash? Feels like competitive advantages are local and constrained to single geographies. Well, from a marketing point of view, you can advertise nationally. They've done a great job capturing share, but I don't know that the market can get that much bigger. And I'm not sure there's that many people who are looking to have like other things picked up by their DoorDash person. I think that's going to be very limited incremental. But Matt, this is what you wanted to talk about. I'd never heard of Roblox. Maybe I'd heard of it casually. Didn't really know what it was before we did this. Why don't you give us the 10,000 foot overview?
Yeah, so it's an online game platform for kids. Not kind of in the style of Minecraft, I guess, but it's really like you enter this world and you enter the platform and you can pick from literally a million games. And that's because it has 2 million developers on it. It's more a platform for developers. Any user can make their own game on this platform. And so there's just so many creative games that it offers. And it's very popular with children between the ages of 7 and 14, with both boys and girls, which is something like worlds like Fortnite and other games like that. They're very popular with boys, not as popular with girls. So that's another thing Roblox has going with it. And has a huge, it's almost more of a social network element than to call it like a video game platform. I've actually paid out allowance money to my kids in Robux, which is its form of currency on the platform. And, you can buy things like, it doesn't affect gameplay, but you can buy like new outfits for your characters or your avatars and new hairstyles and things like that.
I draw the line at paying money for new outfits for characters in games my son are playing. But Matt, is this a safe environment for kids? Because one of the issues I've had with Fortnite is my son's 16 now, so there's probably no words he hasn't heard. But when he was like 12 or 13 playing those games, or even playing like Star Wars Battlefront, some of the language was very salty or racist or insulting or misogynist. Is Roblox protecting that type?
As a parent, you're always going to be concerned about that because you're entering these online environments, and no matter what the platform is, I always have those concerns. One thing I'll say, they're as good as any platform out there about policing that content. Now, I want to say Business Week had a long article a few weeks ago about some games that had risque elements to it. And that's the problem, and all these platforms have. When you're talking about like a million games, it's so hard to police environments like that. That being said, they're known for having like some of the best controls out there. So, I don't think we're getting this genie back in the bottle. I think these kind of platforms are here to stay, and Roblox does as probably better than anyone else does policing these environments.
So Matt, this is a company valued at about $4 billion. They're hoping to double that at IPO. Microsoft bought Minecraft. Is this an acquisition target? I feel like Nintendo should just right now step in and buy this company. Would that make sense?
If you were a Nintendo shareholder, I'm sure you would love that. It could be. It definitely could be, especially with Microsoft taking an interest in gaming. What I would say though is like many of the companies you would say are the usual suspects that might be interested in this kind of acquisition. They're already under the scrutiny for antitrust concerns now. Facebook. Like, I don't think government would be likely to approve an acquisition like this for Facebook. Same for Alphabet. Microsoft, I think might be the most likely purchaser, but it's a great platform.
That's why I threw out Nintendo. It's a family-friendly-ish platform. It would make a lot of sense. Wouldn't shock me to see Comcast buy them as well, looking for content that can move into the theme park world, into other platforms. They're not for sale necessarily, but when you see these companies in these $4 to $8 billion range, they could easily pick it up.
I think for an acquisition, I think it would have to be a home run offer for them to take it. So I would think it would be, for them to take an acquisition, I think it would have to be over $10 billion.
Yeah, and it's hard to pay $10 billion for a company that's on track to do about $1.2 billion in revenue per year. Not profit, revenue. Yeah. Kunal Navani suggests Apple could with the money, but doubt it would pass. Before we move on to what we're watching, let me throw out another couple of comments. Joshua Briss says, I tried Uber Eats for the first time 2 weeks ago. They never fulfilled my order and didn't contact us for 4 hours. This can't ever happen. Also, my pregnant wife was very hungry and very unhappy. This is a problem across all food delivery. I've had similar experiences with every single one. Maybe I'm in a hotel room and they're having trouble finding me. Maybe the restaurant canceled the order. There needs to be more active customer service. The problem is customer service is expensive. Rayal says Apple should have bought Peloton. I actually feel like Apple should still buy Peloton or buy Echelon or buy one of the other top tier providers. Doesn't look like it's going to happen, but I think it would be a good idea. But guys, it's time to move to what we're watching. What we're watching is where each of you pick something you want to talk about, and you have free reign. You can pick pretty much whatever you want. They're usually investing topics, but they don't have to be. But Matt, you wanted to talk about something near and dear to my heart. I'm actually headed up tomorrow. I'm going to be staying in Orlando tonight, and I'm going to Epcot tomorrow. And Disney reported its earnings. I thought they were a home run. Matt, what about your thoughts?
Yeah, I think the big picture takeaway for me, Dan, was that, this has been a tough year for Disney, but not only has it managed through the crisis relatively effectively, it's also managed to invest heavily in its future.
Yeah, so the big thing, and Matt, I'll let you read the numbers. Disney Plus numbers, I just wrote something on this that hasn't published yet, but Disney Plus numbers are something like 3 times their 2023 projections. Matt, why don't you take us through their digital numbers?
Yeah, well, so Disney Plus ended up with 73 million subscribers, which was like that's within its 5-year target for Disney Plus. And the best thing about that, Dan, for Disney shareholders is like this week, it hasn't even launched in some major markets yet. Like this week, it's launching in Latin America, including markets like Mexico, Brazil, Argentina, and Chile. So it still has a long way to go as far as just launching in markets. So this subscriber number is only going to grow.
Yeah, so they're over when you add in ESPN Plus, which year to date went from 3.5 million to 10.3, or all of Hulu. That's Hulu Live plus the cheaper Hulu. They went from 28.5 million to 36.6 million. They're over 120 million paid subscribers. That's 2/3 of Netflix. Matt, tell me if I'm wrong, but really streaming, Netflix is a default, Disney is a default. Prime is successful because you're going to buy it for other reasons. HBO is still successful because it's basically still cable subscribers or people who keep it when they leave cable. And then it's everybody else. Like Disney has basically made itself the number 2 player, and they're a tier above everybody else. Is that a reasonable statement?
Yeah, it is. And we haven't even talked about ESPN Plus yet, Dan. I mean, like sports is facing pressure from cord cutting. And I think Disney is positioning ESPN Plus well to handle that transition for like more sports to be viewed online. ESPN Plus numbers they have now more than 10 million subscribers. That's up almost 200% from the year ago quarter.
Yeah, and ESPN Plus is largely UFC and a hodgepodge of crap. Like, it's not ESPN. And their big move is at some point cable numbers are going to go below where Disney then has the right to bring ESPN or can negotiate the right to bring ESPN out as a standalone platform. That's something I think we're going to see. These are huge numbers, but Matt, not everything else was great for Disney. It was one of those scenarios where obviously they've offset the movie theater business being essentially non-existent by doing two things. They took a couple of movies and they moved them to Disney Plus. That's what they did with Mulan. We don't have those numbers, but it was likely a driver. That's what they did with Hamilton in July. We know that was a major driver. And they're not spending money to market movies. So that offset quite a bit of that division. But theme parks aren't great. I mentioned that I'm going to Epcot, which Epcot's still at 25% capacity. Magic Kingdom's, and I think the rest of the Disney parks in Florida are moving to 35% capacity in the next couple of days. But that's not great. What's the status of their theme park business?
Well, they've successfully reopened their parks in Orlando, Shanghai, Tokyo, and Hong Kong. Paris was reopened, but is now shut down again. And on the call, CEO Bob Chapek really took exception to the state of California, saying, this is a quote, "Unfortunately, we are extremely disappointed that the state of California continues to keep Disneyland closed despite our proven track record." They talked about all the safety measures they've been taking and how it's just like exceeded like industry standards and that California still won't let them reopen. Dan, what do you think about that? You've already been on some, like you mentioned, you're going to some properties. I know you've already been on some Disney properties in Orlando.
Yeah, I was in Epcot with our mutual friend Matt Frankel and his family, and I was at Hollywood Studios with my son really towards the beginning. Disney is doing a better job than grocery stores. They're enforcing mask wearing. They're enforcing distancing. Something like ordering at a kiosk. I ordered at the milk kiosk in Star Wars Land, and you have to do that on your phone. So you cannot walk up and order. Almost every place is contactless. The only place you can even get out a credit card are some of the like stands where you can just get a soda. Restaurants, you place your order in advance, and then you tell them when you're there, and then when it's ready, you get brought to a table and they bring you your food or you pick up your food. The fancier restaurants, you tell them, hey, I'm there, they sit you down. The menus are QR codes. They're doing it as well as anybody could possibly do it. And I agree. They should be opening in California. Zach Epps says, does it make sense for Disney to separate Disney Plus from the other assets, theme parks and cruises, etc.? It doesn't, because the thing about Disney is all its intellectual property ties together. You're going to have a movie become a theme park ride, become an attraction on the cruise ship. The other thing that's important to remember, and we all know I talk about cruise ships a lot, is the Disney Cruise Line is 4 ships. It is an irrelevant part of the company. They are going to be the last cruise line to operate, and given where we are with the vaccine, they're not even going to try to do any of the new CDC protocols to operate in a pre-vaccine world. They're basically going to wait until it's safe because it just isn't worth the hassle and the expense. Whereas the actual dedicated cruise lines, they need to have some revenue. Matt, any last words before we turn it over to Austin, who's going to talk about Fastly?
Well, yeah, just real quick on their parks. It's important to note Walt Disney World, Shanghai Disney, and Hong Kong Disneyland, they all achieved a net positive contribution in the quarter, which means those parks generated revenue that exceeded the variable cost associated with reopening, which is pretty impressive given that they're restricted on their attendance and that they're doing all these measures to provide a safe environment. So they're still opening. Most of these parks are opening and contributing to the bottom line still.
I'll be doing my part Saturday at Epcot, where I'm not going to say I'm going to drink the world. I have to drive home, but there will be an adult beverage or two consumed, probably in France, which is my favorite drink kiosk in the park. And I've already promised my son wants to have lunch in China, which really wouldn't be my choice during the holiday festival. There's all sorts of special food, but I'm going to let him have that one. Austin, before we talk about Fastly and the Altitude Conference and the announcements they made, why don't you give a little bit of overview of sort of what Fastly is and kind of what's been happening with the company this year?
Yeah, sure, Dan. So quick note, I gotta stop hanging out with you because every time I talk to you or I'm around you, you make me want to go to Disney, and we've got 2 kids, so that becomes a pretty big expense. But I guess now's the time to go though, with cost wise. So yeah, real quick, if you're familiar with us and you follow me, you're familiar with Fastly. But in case you're not, basically, online content consumption continues to grow globally, and organizations have to keep up with their rising customer expectations. And what Fastly does is they help their customers by powering fast, secure and scalable digital experiences. And they've developed a platform that handles hundreds of billions of internet requests a day. And Fastly's customers use that platform to deliver basically customized apps, secure apps, and good experiences to their customers. If you hear a kid crying in the background, they're being taken care of. It's just level 2 chaos here right now. So I apologize.
And he means taken care of in the positive way by a caregiver,
yes.
not taken care of.
There is a parent with them, and I'm not just leaving them. Thanks, Dan, for protecting me.
Let's talk a little bit about stock price on Fastly before we get. They're way up for the year, but they've also had some big drops, which is typical of this type of company.
Yep. Investing in these types of companies, we have to be ready for that type of volatility. When it was at the high of the year, it was probably overpriced, at least temporarily. And now when it's sold off 40 or 50%, it's probably a little bit underpriced. And that reaction was a little bit too strong. And we're talking short term. Over the long term, if we're invested in these businesses, we have to believe that the market opportunity is a lot larger and the company can grow a lot larger, which I'm a shareholder and I believe it will. So I'm just ignoring these in between share prices. If it gets back up to the all-time high, I'm going to expect it to drop again temporarily. And if now we're down towards the lows, I expect it to go up. You just have to live with it.
So they held their Altitude conference, which is kind of their hype event, similar to like what Apple might do, what Microsoft might do with developers conferences. What announcements did they make and how excited are you?
Yeah, so a few. And really what I just wanted to see was that they're continuing to innovate. They're ignoring some of this narrative out there that their business is all of a sudden failing or something like that, and that they're just continuing to serve their customers and come up with new products. And so, a couple quick points. Joshua Bixby at the opening shared a story about Doximity, which is a medical network, and just commented how they've seen insane increase in traffic due to COVID, and Doximity turned to Signal Sciences, which is a company that Fastly just acquired to ensure that their platform stayed secure. Those types of stories are going to happen more and more, and this acquisition that Fastly made of Signal Sciences is going to help a lot with security. They shared their product vision, and they gave some updates on two things that have already been out there, which are compute at edge and secure at edge. So I'm going to kind of ignore those. Those are still going basically as planned. But they expanded on their product vision with sort of two newer areas, perform at edge and observe at edge, which we don't have time to go into exactly what those are. The point is they're expanding their roadmap, they're expanding their products, and they're going to start offering more capabilities and services, which is going to make it more likely for customers to sign up and more likely for current customers to be able to spend more money. And then finally, what was just really amazing to me, they shared some details on their network and how they're expanding and upgrading their network. And so basically, their racks, their network racks are becoming more concentrated and more powerful. So through their expansion plan and their upgrades, they went from 1.6 terabits per second to 16 terabytes per second in a year, which is basically a 10x upgrade. And those same racks take up half the space for basically 10 times better performance than what the previous ones did a year ago. So basically 10 times better performance in half the space. And that's how their network is evolving. That's going to let them continue to, lead and give high performing, faster speeds, more secure, and appeal to more customers. And then they just shared a roadmap of where their points of presence, that's kind of their network, where that's expanding to. And they're expanding internationally. They've got new ones in Germany. They've got some in India, some in the Philippines. So things are going as normal. I'm excited about these updates, and I don't see any reason to. I'm not bearish on the company. I'm holding my shares.
So Austin, before I throw out the questions, a couple of different questions we have, let's talk a little bit about 7 Investing. This is, of course, 7 Investing Now. We do this on Monday, Wednesday, and Friday with different members of our team. There's now 7 of us, so each person will get on at least once a week, but we do, of course, sometimes do 3 people on the show or bring someone on for just a segment. So, this is the 7 Investing team. We're going to rotate everybody in and out. But this isn't our only product. Our core product is the 7 stock picks we make each month. Each one of us picks our highest conviction stock, and to subscribe, you pay $17 a month or $170 a year. I'm not great at math, but I think that's 2 months free. And Matt, why don't you tell the audience, the 7 Investing audience out there that's just watching the show, what else they get for that really low cost of $17 a month or $170 a year?
Well, we try to put out like new content every week. So like you said, like our monthly recommendations come out the first week of the month. But then after that, like all through the month, we're releasing new content. So the second week, you see our video pitches that we pitch to the team. The rest of the team, like our recommendations for that prior month, and all the questions we had to field and all the concerns that the other members brought up, which is always like, that's actually like what I think might be the best value to subscribers, to our members.
Yeah, and let me explain a little bit. Like, we literally each do like a 15 to 20 minute pitch of this is the stock I'm going to pick and this is why I'm going to pick it. And everybody asks questions, they push back. So you get to see our process, and you don't just hear the bull case. You also hear the bare questions. Matt.
And then after that, we all write in the middle of the month, we release our column of our own, like of a topic of our own choosing, just whatever we're thinking about, like going on in the market or what we see that we think is interesting. And then the final week of the month, we release like company updates on prior recommendations. So all throughout the month, we're releasing new content to our members.
We also do a monthly call with new members where they can ask us about the service. And of course, we do a monthly call with existing members where they can really ask us anything they want. I'm really excited about it. But Austin, let's get back to Fastly here. So one of the reasons the stock has been volatile is they provide services for TikTok. And TikTok has obviously been in the news. Joey Klein, a friend of the program, asked, whatever happened with TikTok getting banned? Wasn't that a big part of Fastly's sell-off? Austin, your thoughts here?
Yeah, it's really impossible to know exactly why a stock sells off, but it's pretty clear that the TikTok controversy had something to do with it. I have had this feeling all along. If TikTok stays as a customer, great. If TikTok leaves as a customer due to, the political or government regulation or conflicts, it doesn't concern me one bit. It's $12 million in revenue, I think, over the last 9 months or last year. That's a lot right now. But when we think about what Fastly might look like in 5 or 10 years, that's going to be nothing. And they've also got the ability to open up some more network space for some more capacity for other customers to make up for that. So if TikTok were to leave because Fastly wasn't meeting their needs, or they had a better opportunity, better performance, and chose to go with somebody else, that would raise a yellow flag, and I would watch for more customers to do that. But if it's government related, politics related, I could care less. A similar story is Uber, Twilio losing Uber's revenue. And that was actually because Uber was going to build it themselves and didn't really need Twilio anymore. The stock got crushed in like 2017. And now it's, 5x the price it was in 2017. I could see Fastly following. There's no guarantees. I could see it following a similar trajectory though.
Austin, got a couple of questions here from Rayal. I'm going to answer one of them, then I'm going to ask you to answer one, then we'll move to our finisher. He wants to know, how do you get 7 Investing merchandise? We don't actually sell any 7 Investing merchandise. The mugs you see Matt and Austin have, when I joined the team, I printed mugs for the team. We've sent some out to people. We don't have any more at the moment. The shirt I'm wearing, I made at some point. I mean, I didn't make it. I ordered it and got a bunch of them. At some point, maybe we'll put up a merchandise store going to charity or something like that. The problem is shipping one-offs for merchandise is very, very expensive. The shipping to send out one mug was way more than the price of the mug. So it's something we may ultimately do, but we want to be really careful with making sure we have one product. There's no upsell. There's no higher end service we're going to sell you. So if we ever sell any merchandise, it would be for charity or for some other, but we really appreciate the fandom. But Rael wants a prediction. Is Fastly still around 10 years from now, or do they get acquired? I would tend to lean toward acquired. Austin, your thoughts?
I hope they're around, so I'm going to go with they'll still be around.
Guys, it is time to close the show and hit our finisher. Sam Bailey, behind the glass, our marketing director, our producer, if you would share it. Which social media site will grow the most over the next year? This was a Twitter poll that 1,200 of you voted in. More than half of you said Pinterest. 12% said Twitter. 30.9, about 31% said TikTok, and 4.5% said Reddit. And Matt asked me the question, is that growth users or revenue? I kind of had it in my head as users, but I didn't really ask the question. I actually think the answer is going to be Twitter. Twitter's a really broken platform, but it's also really useful. I know people love Pinterest. I just feel like it's a very, very niche product. Matt, your thoughts, and then Austin, you can go after.
I think the safe pick is Pinterest there. I don't think you I doubt you go wrong investing in Pinterest over the next year. That being said, there's so many geopolitical concerns about TikTok, but if those concerns prove to be unfounded, or if things go TikTok's way, that's a powerful, powerful platform, and they could certainly see more explosive growth in the years ahead.
Follow Matt on TikTok, where him and his kids do synchronized dance routines. He also shares his no, Matt is not on TikTok as far as I know. Austin Lieberman, your thoughts here.
Yeah, percentage of users, if we're talking percent, not raw numbers, I would think Pinterest probably grows the most. And out of those companies, I don't own Pinterest, but I'm most interested in it as an investment. I really like the things, how easy they're making it. If you go into the app, they make it so easy to see something, click on it, and buy it. And it's just a really interesting dynamic. They also have a strong female demographic, which is something that a lot of other e-commerce and social media platforms have struggled with. And I think that's going to be a major advantage for the platform. So it's a really interesting investment to me.
I don't know if anybody from Reddit is watching or will see one of the replays, but maybe update your site from like the 1985 message board look. Like I feel like you could make it a little cleaner, a little nicer. Basically, they're in Craigslist territory. Our own Steve Symington says, really though, Pinterest is on fire. Zach Epps says, really great show. Thanks for answering my questions. Really appreciate it. This is an interactive show. We are glad you're here, especially on a Friday. Rayal says, I planned a whole Halloween party with Pinterest. It's an essential. Be careful with your parties. I've said this before. We still have a pandemic. But guys, that's it. That finishes up today's show and this week's episodes of 7 Investing Now. If you have questions for us, there are a couple of ways to get in touch. The easiest one is info@7investing.com. Send us an email. Someone on the team will make sure the right person gets it, and we'll answer you. Now, we can't give specific investing advice, but we do try to answer your questions. And of course, if you're a member, you get to go to those private calls with us where there might be, it's not the wide audience we're getting for 7 Investing Now. It is an exclusive number of people. So that is a great idea. You can also follow us at 7 Investing on Twitter. That's at the number 7 Investing on Twitter. And all of us look at the Twitter account. We share things around. We love when one of our members shares their referral code. If you share your referral code, not only does the person joining get a deal, but the person who shared the code gets a free month. And here's what we want. We want all our members to get free years, because that means that they've driven 12 new memberships. But guys, that's it. Thank you. Everyone watching, thank you. Enjoy the weekend. See you later.